Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2023 question number which one? Question number 14. Question number 14 and 15 are both questions are related to partnership account. These questions are related to one information. Therefore, I create answers to question number 14 and question number 15. Firstly, we must identify question number 14 requirement. Look here. Current account balance of PL as at 31st March 2023. This is the closing date. Okay. We must identify current account balance of PL as at 31st March 2023. After that, the 15 requirement, capital account balance of PL after adjusting for Neil's retirement. We can imagine that there's a retirement of Neil. Neil is retired person. Okay. Capital account balance of PL. Okay. PL's capital account balance after adjusting for Neil's retirement. After the Neil's retirement, we must identify the capital account balance of PL and loan account balance of Neil as at 31st March 2023. The closing date, the loan account balance of Neil. Therefore, we must identify the both capital accounts and current accounts. Therefore, I create capital account and current accounts. Look here, this is capital accounts. I create only 3 columns. Why? I said that this is the current accounts. Okay. After that, I create capital accounts. These are the capital accounts. Okay. At that time, I use the plus and minuses, increase and decreases. I do not enter the credit and debit shorts. Okay, I record increase and decrease. Why? You know, capital accounts are credit dials. Therefore, all credit shorts I add this account. Okay, all credit short I add this. Add means I increase this all credit short to capital accounts. After that, there are debit shorts impacted to capital accounts. I deduct, and therefore all debit shorts I minus this. Okay, this is the requirement. All credit short I increase this short, and all debit short to the capital account I decrease that short. This rule is impacted to current accounts. Why? Current accounts are normally credit dials. Therefore, all credit shorts I add. All debit short I minus this. Okay, these are the thousands. These capital accounts are ₹1000. Okay, what is the rule? All credit shorts I increase, that I plus this one. All debit short I decrease one, I minus this one. Okay, let's see the question. This is the question. Look here. Use the following information to answer question number 14 and question number 15. Okay, let's see. PL, Lal and Neil. What are the names? PL, Lal and Neil. Okay. What are the partners? PL, Lal and Neil. Okay. Let's see the question. Neil, carry out the partnership sharing profits or losses equally. Okay, this is the profit or loss equally means there is profit ratio, profit to loss, ratio, profit or loss ratio is PL, Lal and Neil equal means 1 to 1. Okay, this is the equal ratio. Next one, look here, the balances of capital and current accounts of the partnership as at the 1st April 2023 were as follows. The 1st April 2022 means opening balances. There are opening balances, capital accounts, PL 6,000, there is 1,000, no? 4,000 and Neil 2,000. We can enter these amounts. This is the 4 capital accounts. Capital accounts, opening balances, opening balances. 6,000, 4,000 and 2,000. These are the balances of capital accounts. Okay, what are the balances? 6,000, 4,000 and 2,000. Okay, this one, current account, credit is normal balances. Okay, 800, 600 and 400. Let's see, 800, 600 and 400. This is the opening balances of current accounts. Opening balances. Okay, these are the credit balances. No, they are normal balances. Okay, let's see the question. As per the partnership agreement, each partner entitled to an annual salary 800 and 10% annual interest on opening capital balances. Before the recording this interest on capital and partner salary, I must read the retirement case. Look here, Neil retired from the partnership 31st March 2023. This is the closing retirement. Why? This is the closing date. This is a retirement. Retirement is closing date. Therefore, the old agreement should be applied. Okay, the retirement, after the retirement, you know, the new agreement is carried out. Okay, the retirement is the current year closing date. Therefore, the old agreement should be applied. Old agreement should be applied means these are the old agreement sentences and old agreement criteria. What are they? As per the partnership agreement, each partner entitled to annual salary 800. Annual salary, each partner is 3 partners. What is this? The annual salary 800. What is the double entry for partner salary? Look here, partner salary. What are the locations? Partners salary. Partner salary. What is the double entry? Current account credits. Current account credit and debit to P&L profit or loss appropriation account. Appropriation account debit. You know, current account credit short. Okay, what is the profit or loss appropriation account debit location? Look here, you know, at the preparation of income statement, you know, after the profit for the period calculated, you must enter partner salary. You know, look here, there is a already calculated profit for the period. Their expenses, cost of sales are above the profit for the period. After that, you know, you deduct partner salary. not paid one, no, total one, partner salary. There are 3 partners. This location, profit or loss, appropriation, credit, debit means we must deduct from profit for the period. Okay, partner salary. Who are they? Who are the partners? PL, Lal and Neil. Okay, PLN, PL, Lal and Neil. 800 for all partners. We must deduct 800. Okay, this is the location of profit or loss appropriation account debit. Okay, after that you must credit to current accounts. Okay, credit to current accounts means this is the current account. Credit to current account means you must add this one. Okay, therefore partner salary I must add. All credit short you must add this one. Okay, this is the partner salary. Partner salary. Okay, partner salary, current account credit, you must add this one and deduct from income statement, profit or loss appropriation account. After that, what is the question said? There is interest on capital, no? They said that, look here, 10% annual interest on opening capital balance. Okay, there is annual interest on capital. Interest on capital. Okay, opening balances. What are the opening balances of capital accounts? 10%. You know what are the opening balances of capital accounts? 6,000, 4,000 and 2,000. 10% is 600, 400 and 200. Okay, let's see what is the double entry. You know double entry is same for this one. Okay, current account credit, profit or loss appropriation account debit. Firstly, I write profit or loss appropriation account debit means you must deduct from interest on capital. Profit or loss appropriation account debit means you must deduct from profit for the period. Okay, interest on capital. Interest on capital for all partners. PL, Lal and Neil, 600, 400 and 200. What are the basement? Basements are there. 6,000 to 10%, 4,000 to 10%, 2,000 to 10%. What are the answers? Cut the 10. 600, 400 and 200. Therefore, I write it in 600, 400 and 200. These are the deductions. After that, current account credit. Therefore, 600, 400 and 200. Current account credit means we use the current accounts. Credit means we must add this one. Okay, 600, 400 and 200. Interest on capital. Interest on capital. Okay, what is the question said again? Next one, they said the partnership reported a draft profit of 5,000 and 100,000. This is 5.1 million for the year ending 31st March 2023. Look here, they say draft profit. Draft profit means there is a wrong profit was calculated. Draft profit 5,100. The draft profit was directly contribute to this one. Look here, we already calculated profit for the period. No, profit for the period was already they calculated 5,100. This is wrong. Why? They said draft profit. There is another information below this statement. Look here, draft profit means they already calculated profit for the period, but draft means there is some error in this draft profit. Therefore, we must separately identify this one. After the correct profit corrected, we must include this profit for the period. Okay, let's see the question. Next one. Look here, this is the point. PL has paid 300 for current year expenses of the partnership from his personal money, but it has not been accounted in the books of partnership. Look here, PL paid, okay, 300 for current year expenses of the partnership. There is a partnership expenses there. PL was paid from his personal money, but it has not been accounted. The partnership expense was paid by the partner personal money. At that time, we can imagine that this is the support for partnership. Therefore, 300, what is the double entry? 300 double entry was, I write that this is the support to the business. Therefore, this is credit to current account. Credit 300. Which partner? This is the PL, no? This is the PL. Okay, PL. Current account means PL current account credit. Why? We must paid. At the view of partnership view, we must payable for PL. Therefore, all payable should be credit to current account, debit to which account? Expense account. Our business expense, no? Therefore, expense account debit. Expense debit 300. PL current account credit, no? We can credit it 300. Current account credit. Credit means we must plus 300. This is the expense. Okay, we must payable for PL. Okay, next shot is expense debit. Expense debit means expense identified. Do you know the profit for the draft means profit is credit dial. Profit means credit dial. Okay, all profits are credit. This short is debit. Therefore, we must decrease this profit 300. This is the expense, no? This is the expense. All expenses are identified. Expenses are debit, no? Therefore, these 5,100 was credit. The currently profits are credit. At that time, expense was debit, no? This is opposite. Therefore, I deduct this one. Okay, next one. Let's see the question. Neil retired from the partnership 31st March 2023. This is the closing date. On this date, goodwill of the partnership was estimated 1.2 million is 1,200, and it should be adjusted through the capital account of the partners. The amount due to Neil on this date was transferred to loan account. There is a payable amount. Some amounts are collected from the capital accounts and current accounts. At that point, the amount due to the payable Neil on this date was transferred to loan payable account. PL and Lal agreed to continue the partnership sharing profit or loss equally. We must adjust goodwill. Okay, what is the double entry for goodwill adjustment? Goodwill adjustment should be carried out in the capital accounts, no? Capital accounts. Okay, these are the capital accounts. What is the double entry for recording goodwill? We must credit to all ratio. Therefore, capital accounts credit. What are the partners? All partners are PL, Lal and Neil. What is the ratio? Equal. Okay, this is a total goodwill was 1.2 million is 1200 divided in 3 400. Therefore credit to 400 capital account, and debit to again capital accounts debit which partners? New partners. Okay, new partners are without nil was PL and LAL. Is the equal ratio 1 to 1. 1 to 1 means 1.2 million 1200 divided in 1 to 1. 1 to 1 means 600 and 600. Sorry, 600 and 600. This is the answer. Okay, let's see this impact. This shortcut should be add to this one. Look here, capital account credit, no credit short must be add 400 and 400 and 400. Therefore all credit short must be add to capital accounts. Capital account 400 is a credit. This is the goodwill all ratio. Again we must adjust goodwill. New ratio was related to only two partners. New ratio was this one, 600 PL and LAL. Debit, no, we must minus this. Okay, we must minus this 600 and 600 without nil, minus. Okay, after that we can calculate all answers for this question. All are done. Finally we can transfer to the loan account. Okay, let's see. First requirement, current account balance of PL. Okay, at that time current account balance of PLs, we already calculated some adjustments, but we do not enter the profit shares. Profit shares are there. Look here, profit shares are this page. Okay, profit shares are we already calculating. Look here, this is the income statement. This is the draft profit calculated. 5100 was wrong profit. We adjust expense minus correct profit is 4800. 4800 should be carry out this point profit for the period. After that we must deduct this one. I again create another column for this one. 4800, this is 800, there are 3 800, 2400 must be deduct. After that you must deduct 6000, 1000 and 1.2, 1200 was deducting from this 4800. This is 2400, 1200 was remaining 1200 should be divided in profit or loss shares. For Neil was retired from the closing date, no? Therefore we must give him the profit shares. Therefore profit shares are equal minus profit shares PL, LAL and Neil. This is the equal ratio. 1200 divided in 3 means 400. This is the profit shares. We can get 0. Okay, these profit shares should be credit to current accounts. Therefore 400 for every partner. 400 for every partner we must credit to current accounts. Okay, this is the current accounts profit shares 400. This is a credit, no, we must credit means plus 1. 400. Their requirement is PL's current account balance. We can get easily PL's current account balance. Current account balance was 2900 was current account balance of PL. This is the answer. 2800 Current account balance of PL 31st March 2023 2900. Answer is 4 for 14. In next video we meet question number 15. We already calculated. In next video we must calculate answer of question number 15.